Okay, firstly, I haven't lost my mind. I'm not buying physical gold and stashing it in a bunker somewhere. I don't think the world is going to go into the Stone Age or anything crazy like that. But today I am looking at a gold mining company that I have done a lot of work on over the past few weeks. Now this won't be for everyone, I get that, because the first thing that I think of when I think about mining companies is that they are risky and over leveraged. People are just speculating on the future and there are so many things that can go wrong. Mining companies are typically bad investments. So how is this going to compound my money? This isn't my style of investing at all. Well, even though a lot of that is true generally, there are an exceptional company or two that are getting totally overlooked. When I found this company, it looked like probably the cheapest money printing machine I have ever investigated before. Later in the video, I'll show you just how cheap, but let me first try to explain what the heck is going on here. Now, before we get started, you will need a brokerage account that can allow you to invest in international markets. And for those who want the safest brokerage account for buying shares in many different countries like Canada, I have a link to Interactive Brokers in my description where you will get free Interactive Brokers stock for signing up and using the platform. See, if you think brokerage companies are all safe, well, you're wrong. I have friends and family who have been victims of bankrupt brokerage companies before. They are not all created equal. Interactive Brokers are, in my opinion, the safest and one of the best. This is far better than Robinhood or anything else like that because Interactive Brokers have decades of experience, strong balance sheet, and an extremely solid, trusted business. I think it is unwise to risk all of your money in a startup like Robinhood or Webull or those new apps. I think could be problematic, and you just don't need that extra risk when you're investing. They don't have the balance sheets or experience to handle a GFC-like event, but Interactive Brokers do. They also serve people in most countries throughout the world, so Germany, Japan, Spain, Ukraine, wherever you're from, you can get an account. I personally have an account with them and Saxo Bank, and like I said before, there is a link in the description, and when you sign up, you will get some Interactive Broker stock. Okay, let's now do the deep dive into Gran Colombia. The first thing I set out to do here was to understand the industry. I didn't know much about mining companies and how they work. This video will be good for me to summarize how I see the industry working. Firstly, there are two levels of mining companies. The first stage are called junior miners or exploration miners. These companies raise money from crazy investors and some other mining companies to look for gold and platinum and copper or whatever. Now, it's all about the risk-reward ratio for these companies. See, generally it costs somewhere between $10 and maybe $50 an ounce of gold to search for gold. Do the studies, drill the holes in the ground, etc. And if they don't find anything, well, they lose the money and they file for bankruptcy. But if they do find something significant in a good location that is attractive for a real mining company to potentially use, then a real mining company might just come in and buy the exploration company for, I don't know, $300 per ounce of gold that is discovered. So that could be a 10 to 50x return. So you might think that this is an asymmetric bet. But these exploration companies have so many things that can go wrong. Just finding something is difficult, but then developing it enough, building infrastructure, dealing with the governments and locals before actually construction, there are just so many complicated steps. And a lot of them run out of money before they are able to find the gold in the first place. In my eyes, it's a bit of a lottery and there are a lot of shady people in this space, promising to investors that they are sure that there is gold in this location, saying it's nearly guaranteed, only to actually go out and find that it's like very small amounts or too difficult to mine or some other reason. Apparently just 1 in 3,000 junior miners become a producer. So this is not the space that appeals to me, as I think I am just not experienced enough to know which ones are good and which ones are bad. If a mining company's stock is less than $1 on the stock market, well, they are probably a junior miner trying to attract people to fund them. The psychology of this is exactly the same as the crypto markets. You see Doge Bear coin or Jim coin or some other coin that is 0.0002 cents. And you think, well, this could easily do what Dogecoin or Ethereum did and go up to 20 cents or $1. And it's only a fraction of $1, so why not take the risk? But there are literally thousands of these cheap coins in the crypto world, and it's just a gamble, just like a lottery ticket. And it's a similar mentality to the cheap junior mining stocks. This is far too hard for me to work out which ones are going to win or not. There are probably some people out there who are deeply involved in the industry that would have a big advantage here, But that's not me. Then we have the second stage, or major mining companies. So these companies have decades of experience. They are well funded, diversified throughout the world, and reliably pull things out of the ground each year. Majors are easy to value and relatively safe to invest in after we analyze the business. When we value these companies, we look at how much resources they have in the ground and what price these resources are. It's pretty simple. For example, if a company is producing 100 ounces of gold a year and has 1,000 ounces of gold still in the ground that they can dig up, well, they have a life of mine of about 10 years. Then if the cost to dig up the resource is less than what they can sell the resource for, then it's a feasible operation. Now, there are a lot of risk factors with mining companies. A lot of mining operations are in unstable countries. West Africa, South America have had plenty of issues in the past with governments, military, and guerrilla forces interfering. Plus, the price of the commodity itself, like gold and platinum, it moves around a lot. So now you might be thinking, what the heck am I doing looking into this space? Well, that is kind of the point. All my life, I have avoided learning about the mining industry. I had all these preconceived ideas about bad environmental practices, poor treatment of workers, shady operators, and wild price fluctuations. It's also not even close to what anyone else is looking at and talking about at the moment. The hottest industries are tech, crypto, and electric vehicles. Mining seems so barbaric and not really part of the future at all. Once I realized this, I started thinking that if hardly anyone is looking here, maybe there are some interesting opportunities in the space. Seriously, how many people you know are talking about mining companies right now in the investing world? Gold, platinum, rhodium, silver, copper, nickel, lead, all are important things we need in the tech world. From manufacturing microchips to reducing CO2 emissions in cars and making batteries, the world needs these materials. So there is some utility demand in the world for these materials. Whether that demand is going to grow or not, well, I'm not exactly sure. Then there are the commodity investors, especially in gold, that think gold is a good investment. Let me be clear, I don't think gold is a good investment, but I think a mining company selling the gold could very well be. If someone wants to pay $10,000 for a shiny gold-colored rock, well, I'll sell them that rock. I'm oversimplifying this topic, and I think people who buy gold as a store of value have their own opinions. It has for centuries been a store of value, and if people are scared about inflation, then gold isn't a terrible alternative historically. But let me be really clear. I am not looking at this investment because of inflation fears or anything like that. I have no idea what is going to happen. I'll leave that to the Burries and the Ray Dalios and those guys. Now, I do know that inflation exists, and holding cash is never a great idea unless you are waiting to find something to invest in. Cash isn't all that bad. I needed to pay for things online, so it's pretty useful. But I have no idea what's going to happen with inflation, interest rates, government debt, anything like that. That's all too complicated for me. And this is not the direction I want to take this video. I think it's actually a trap to go down this path. Let me keep it simple and just say that some people buy gold as a store of value against inflation. Some people buy gold to use it in manufacturing and scientific processes. And a lot of it is used for jewelry as well. Now, earlier I just highlighted the two stages of miners. We had the juniors and the majors. But there is a gap in the middle, and I call them the mid-tier miners. There are only a few companies that are mid-tier miners. They are small, they are producing reliable resources each year, they have many years of resources available, and they are well funded. Gran Colombia is a mid-tier miner. They look like a junior miner on the surface, but they are more like a major. They have a reliable 200,000 ounces of gold they are mining each year. The life of mine of their major mining operation is 7 years. They have a solid balance sheet, which we'll get into later. They are expanding into areas where junior miners have found resources, and they're priced like they're going out of business. I'll get to that later in the video as well. The major mine is in Colombia, yet they have projects now in Canada, Spain, and Guyana. I think that Gran Colombia, because it is not a fully fledged diversified major, gives investors an opportunity to get a money printing machine for cheap. Now, there are no guru investors in this one, as it is a small cap company, about 320 million Canadian dollars in size. This rules out a lot of gurus. Plus, it is a mining company, and not many people are paying attention here. One of the questions I ask myself on my investing checklist is the company boring? Well, that's a big yes. This is a totally boring and neglected market. See, junior miners are kind of popular for traders and gamblers. Major miners are popular for institutions and dividend investors, but these mid-tier miners are somewhere in between. I heard someone recently say that crypto has taken the attention from the junior miners. Junior miners used to be the place where you could get 10x or 20x return on your money quickly, but now you can get 5x in a week in crypto. The hype has moved away from the junior miners to crypto, which has led to even less attention on these mid-tier miners like Gran Colombia. Now this might sound strange, but Gran Colombia is a spawner. A spawner is something Monish Pabrai, my favorite investor, recently made popular and is a company that is spawning out new projects and new businesses. Think like Google, Alibaba, Tencent, and Amazon, with all their different projects going on. Well, I think Gran Colombia is also somewhat of a spawner. Over the last few years, they have been teaming up and spinning out good junior mining companies that have already found gold. Not complete speculation here. These companies have found the gold already and have the potential to greatly expand the reserves for Gran Colombia. So here are some of Gran Colombia's spawners. They have a 45% stake in RS Gold, which market value is at about $170 million. Now, just recently, they acquired 100% of GoldX, and its market value is approximately $200 million. They have a stake in Daenerys Silver, which is about $14 million, and a stake in Atlas Resources with a market value of about $2 million. So if we add this up, we get to $386 million. Plus they have more cash on hand than debt as well. This is more than the market cap of the company. So if you are buying shares in the company, you haven't even factored in what Gran Colombia is cash flowing, and we still are getting decent value. Now, all of these spawned entities have their own prospects and potential. They also are in different countries throughout the world, like Canada, Guyana, and Spain. In my opinion, Gran Colombia is turning into a major mining company with worldwide diversification. This is free upside. Now, regarding expansion plans for the main cash flow operations of Gran Colombia themselves, the main mine they have is called Segovia. They have some others, but this is the big one. Currently, they are using just 3 of the available 27 mine sites on that property. Now, the initial reports that are coming out of these areas are very positive, and they want to develop and explore the area a lot further in 2021. They have found high quality areas of gold in the samples so far. It appears as though it is now a matter of constructing and mining it. This is the plan now for 2021. Again, this is more upside potential here, but we are just not sure what is possible. They could have issues with the ground, construction delays, or a number of things. We'll have to just see what happens. Then with the GoldX expansion, Gran Colombia is acquiring GoldX, which is a mine site in Guyana, which is another South American country for those not familiar. The cool thing about this project is that there is over 7 million ounces of gold measured in the feasibility study, with potential for another 3 million. This is a longer term play, as this could take 3 to 5 years to get production up and running, but gives the company a longer runway now for potentially 10, 15, maybe 20 more years. This is, of course, never guaranteed, but again, big upside potential. So the company isn't just sitting around waiting for their resources to run out. They are spawning off these new projects and joint ventures to potentially turn into a major mining company, making a lot more money. Now, calculating out how big the company could eventually be is not easy. I think it is important to think of where the company is going to be in 10 years' time. But it actually depends a lot on the price of gold. If gold prices fall apart, well, the profitability of the company is going to be in trouble. If gold prices are strong, this could be a huge winner, and with the gold reserves they will have, the range of outcomes is actually really wide. The issue with the industry and most mining businesses is the lack of pricing power. Gran Colombia cannot charge more for their gold. Gold is gold. Unlike a company like Nintendo, they can easily charge $10 more for their games, and everyone is probably still going to play Mario Kart. Now, the major shareholder and executive director of the company, Serafino Icano, said multiple times that we can take our production to 400,000 ounces a year fairly easily. With strong gold prices, this could be big time money, and I'll calculate that out later in the video. Competitive advantage is an interesting topic for a gold mining company. Like I said before, the product is just gold. Gold in Australia is the same as gold in South America, so it's a pure commodity. So where mining companies get their competitive advantage comes from the size of the reserves, costs of production, and ability to survive when the gold prices are depressed. So we would need a good balance sheet as one of the most important things. But whichever mining company holds the rights to mine on a particular piece of land, well, they get the control. So a good reserve is a competitive advantage. Gran Colombia does have a location competitive advantage. For a company to be operating for many years in a country like Colombia, they have extensive experience with the government, the locals, and the regulations. This makes it very difficult for another company that doesn't have Colombia experience to come in and compete. And Gran Colombia is 3 times bigger than the next biggest Colombian gold mining company, giving them a pretty big competitive advantage. See, if they can keep a good relationship with the community, hire local workers, and overall be a positive influence on the region, well, no government is going to kick them out. And so far, the company does offer a lot of aid to nearby areas to keep them happy. Plus, they let regular little businesses come onto their land and mine for gold alongside them, like teams of local prospectors sifting through the dirt looking for gold. Then these local people then can sell the gold they find to Gran Colombia on site, and they get a decent price for it. It's a great little symbiotic relationship where people go around the large area looking for gold and give free information to Gran Colombia on where the gold was found. Gran Colombia then can go out and explore certain areas themselves to see if there is an opportunity for a mine site. Essentially, it is free research for Gran Colombia and a job for the local people. But whether these things make a competitive advantage or not, well, it doesn't hurt. But at the end of the day, this is a commodity business, and the success of Gran Colombia is tied to the gold price. This, I think, is the major risk of this type of investment. They will need a good balance sheet so they can survive for a long time, and we want a big margin of safety. The sooner we can get our money back, the better. Now, if we do turn to some of the financials, well, we don't get a long history here as the mine has only been functioning properly for a few years. Prior to 2018, production levels were lower as they were building towards 200,000 ounces. Now, along with production reaching 200,000 ounces, the gold price obviously affects revenue. So looking at revenue growth isn't going to tell us much. The gold price has moved higher over the last year or so. Therefore, the company is making really good money right now. And because of this higher gold price, gross margins are up as well. I don't think looking at the growth rates is a smart idea for understanding this investment. We have to consider it more of an asset play. When I value the company later in the video, I'll look at what we can expect the company to generate regarding cash flow for us investors moving forward. Okay, so the management teams for mining companies are really important. Generally speaking, mining companies are notorious for destroying capital. So we need to be careful here. We want to see management doing good things for the shareholders and the longevity of the company. Firstly, I want to see management alignment. Serafino Icano does own about 3% of the company at about $9 million, and his compensation is only about $1 million. Well, that is actually high, but his net worth is tied to the fortunes of the company. So this is a good start. The company has also issued a monthly dividend that is about 3% yield right now. This is to try to encourage more investors to find the company. They want this dividend to be a long-term and sustainable thing, which I think is a good tactic to try and get investors to be more interested. Look, I personally don't like dividends because it's tax ineffective, but in this case, I think it's actually a smart idea. The company is making a lot of money and it has plenty of cash, so if this strategy helps attract investors, then that is fine with me. Another good thing for shareholders is the paying down of debt. This has been happening over the last year, and now debt levels are nice and low for a mining company. I like this a lot. The debt to equity ratio is just 0.15, well below my 0.7 threshold. The current ratio is 1.5, which is right on the number I'm happy to see. And the cash in the bank is now over $70 million and looks like it'll grow a lot during the current quarter as gold prices are strong. So the balance sheet is strong, and this was important to understand. If we turn back just 5 years, well, this company was in trouble. They were losing money, they were having issue after issue, but they have now turned things around and have become very profitable. Turning a business around is not easy to do, so I'm happy with the management team at the moment, but it is still going to take some time to get more comfortable with them. That's okay. I don't need to jump into this too fast anyway. Alright, so if we take a look at all the valuation metrics for the past 12 months and the next 12 months, we see some very interesting things. Now we have the price to book value per share at about 1, which means we are buying the business for pretty much exactly what it is worth if we sold it all today. That's fair. But that doesn't factor in the cash flows, and that's where things get interesting. The next 12 months total enterprise value to EBIT is a great fast valuation metric. This is better than a PE ratio because we factor in the cash and the debt of the business. At a 1.73, this means that in 1.73 years, earnings will add up to the enterprise value. And enterprise value is what we are buying when we buy shares. So in other words, if we buy shares and the company just continues operating like it is today, the company will earn the same as their entire value back in under 2 years. That's insane. That's better than a 50% return. I'd like to see you find a better deal than that anywhere in the world. Sure, the gold price could come down and this will take longer, but gold prices could also go up and it take even less time. I don't know which way it's going to go, but at 50%, well, there is a lot of margin of safety built in here. Then we look at the next 12 months market cap to free cash flow, and that's at about 3x. This is also a good metric to look at. Let's compare that to some other investments. So here are the numbers for Barrick Gold right now. Now, Barrick Gold is one of the major gold miners of the world with more diversification, but still they get the same gold price as Gran Colombia. So they have a 1.5 price to book value compared to just 1 for Gran Colombia. They have over 9x next 12 months enterprise value to EBIT compared to just 1.73 for Gran Colombia, and 15x market cap to free cash flow compared to just 3 for Gran Colombia. Gran Colombia is valued like they don't produce anything, but they are reliably pulling out 200,000 ounces of gold a year. Okay, now I've worked out the current valuation based on current information and current gold prices. This is early June 2021 for those interested. So what I've done here is I've got the production ounces per year at 200,000. Then I've got $2,200, that's Canadian. I think it's about 1900 USD at the moment. That's what the spot price is. So that would produce a revenue of $440 million. The all-in costs are $1,270 per ounce. So the expenses add up to what, 250 odd million. So earnings before tax is 186 million. The after tax is about 120 million. And the current enterprise value is 315 million. So that gives us an enterprise value to earnings of 2.6, the enterprise value to EBIT of 1.7. And what I've gone here down the bottom for the upside is the industry average is somewhere between 4 and 10 enterprise value to EBIT. So just multiple expansion alone, I think it should be worth more like $750 million to $1.5 billion. So there's the upside potential there of 230% to potentially nearly 500%. That's right now. Now what I've done here is I've just lowered that spot price quite significantly, all the way down to 1,300 USD an ounce, which in Canadian is 1,550. We still have upside potential of 70 to 140%. With that multiple expansion. The reason I chose $1,300 as my bad case scenario is because I have read that there is a strong floor set in the market at $1,300. What I mean is that there is a lot of demand to buy at this price. It is possible it can go lower, but that would take a lot of selling pressure. So I'm happy to use $1,300 gold as a bad case scenario. I got this information from a gold investor on YouTube, so whether this is accurate information, well, I haven't been able to prove it yet because I don't get access to the data, so don't quote me on this. So if the gold price was even just to move up a little bit to 2,000 US dollars, well, our upside obviously increases now to nearly 300 to 600%. Now we don't know what is going to happen with gold, and we also don't know if the multiple expansion is going to happen either. These are just my targets. At the end of the day, a business is worth the value of the cash flows it produces. So as long as Gran Colombia keeps producing gold and gold is valuable, well, there is a lot of money being spit out by the company. And we can buy these cash flows right now for cheap. I used to run an online e-commerce business, and the valuations put on my company when I sold it was about 3 times EBIT. So I'm now buying an operating gold mine for about 2 times EBIT. And I can tell you now, this company has a lot more upside potential than my e-commerce company and is far better managed. Let's now look at a scenario where the company does in fact produce more gold, reaching that targeted 400,000 ounces per year. So using today's spot price and that 400,000 ounces of gold per year, maybe they reach this in a few years' time, well, just with that little bit of multiple expansion, we could see an upside of 470 to 900+%, maybe in 2 or 3 years. Now what I'm doing here is I'm showing at 2,000 US dollars an ounce and 2,250 US dollars an ounce and what that happens to our potential. Now, we could get all the way up to, well, for the 2,250 US dollars spot price, up to nearly 1,500%. Somewhere in that range is potential for us. Now remember, that's an increase of spot price and an increase of production. So that's 2 things that have to go right. But of course, unfortunately, in all of this, we are at the mercy of the gold price. So the range of outcomes can be pretty dramatic. In my opinion, I think the range of outcomes ranges from 70% to 1,400% over the next 3, maybe 5 years. The share price right now, when I'm making this video, is $5.20 Canadian dollars, by the way, if you just wanted to know that. But there are risks to the downside as well. This is what I want to try to understand as much as possible to see how much risk I am taking. What I'm trying to get comfortable with is I'm trying to find a heads I win, tails I don't lose much situation. I'm trying to identify that. So this is how I'm thinking about this potential investment. Gran Colombia is producing 200,000 ounces of gold per year. Therefore, I should achieve a return on my investment in a couple of years, somewhere between 2 and 5 years if gold can stay around its current level of say $1,800 an ounce. My return on investment is likely to be pushing 50% per annum. This will be returned to me through increase in book value, dividends, and share buybacks. The Segovia mine life is about 7 years from 2021. Therefore, getting my money back is pretty likely. I'm looking to get multiple expansion as the company continues to make money and is recognized. Then there is upside potential with the company increasing output to say 400,000 ounces and beyond through the expansion of Segovia, the Guyana project, plus all the spawners. So here are my positive catalysts for an increase in the share price. And I think these are simple and achievable. We want to see a stable or increasing gold price, increased production, increase of the dividend to attract more investors, and that Guyana project coming online quickly. But the negative catalysts for a decrease in the share price could be a decrease in gold price, decrease in output because of operational problems, costs increase, and maybe delays in that Guyana project. So if I do invest, I want to know when is it time to exit. So I think if the thesis hasn't played out in 3 years, I should sell and move on. I should also sell at 10 times enterprise value to EBIT, which is similar to the majors like Newmont and Barrick Gold. At 10 times enterprise value to EBIT could be because there are issues with production or the share price has shot up and is now past fair value. Either way, at 10x I should sell. Another reason would be if output decreases below say 150,000 ounces without a clear, simple way to increase production again, I should sell. For example, if the pandemic shuts down a mine for a few months, well, that's not a reason to sell because they'll get it going again. And I should sell if management starts going into significant debt. I don't want to see a debt to equity ratio above a 0.7 or a current ratio below a 1. So if I did invest in this, the goal would be to hold for at least 10 years because it is a money printing machine that will give me a big return on my investment through increased book value, dividends, and share buybacks. My 3-year goal is 10x. That would mean increased production, an increase in gold price, and multiple expansion. That could be 115% per annum return. Now, I believe the potential of this investment going to zero is low. They have diversified assets plus strong cash flows. Gold prices would have to fall apart and stay broken for a long time. And with all those buyers at $1,300, I think gold breaking this level is unlikely. But gold prices are out of Gran Colombia's control. Governments in the countries of Colombia and Guyana could cause problems for the company. This is a big reason why the company is cheap. Venezuela next door is a mess and caused huge problems for the miners in the past. And I think people generally make out governments as worse than they appear, but of course it is a risk. And politically in Colombia at the moment, there is a lot of protests going on between the people and the governments, and there's riots in the streets and all sorts of things happening. So look, that is definitely dampening the stock price for Gran Colombia. If those things scale out of control and maybe overthrow the government, then this could be a problem. I don't know what's going to happen. I'm not going to try to predict that. Maybe it's an opportunity as well. Now, if I was to invest, I could keep an eye on the progress of the spawners, production levels, gold prices, and the reserve levels each quarter to track the thesis as it goes along. I also have clear exit points that I can check on to see if I need to abandon the ship. Now, I have gone into a lot of detail here, as I am enticed by the upside potential, the low downside, and the relatively simple understanding of the plans for growth. But is it a great business? Well, no, it isn't. It is at the mercy of the gold price, and I have no idea which direction it will go. Any business that can't control its revenue is just fundamentally not that good of a business. It is probably the cheapest mining company with pretty good fundamentals, but commodity prices are not in control of the company. Now, does that mean I won't invest? Well, I'm not sure. I'm going to think about this one a little more. I might put a little money into the company as I think it is far better than cash, but look, I really want to find great businesses. I don't really know what I'll do. Maybe I won't invest. I'll deal with this later and I'll let you know. But what do you think of the company? Do you like it? I'll be following Gran Colombia from now on, so make sure to subscribe so you don't miss my future updates on the company. Hit the like button if you got something out of this, and I will see you in the next video.